Hello everybody, welcome to JAIIB CAIIB English Medium channel. Now as you know that we have the exam of PPP on 8th of November and we are left with effectively 1.5 day, and in these particular hours which we are left with, what we should do. First of all, you must revise whatever you have studied. Secondly, you must practice. Okay, these two things are the most important you can say part of your preparation strategy for the remaining time period. And when we talk about the previous exams, that is May 2025, there we have seen maximum changes in the PPP subject were thanks to the introduction of numerical section. Fine. So many questions were asked based on the formula, numerical type of questions were asked. And in this particular session, we will be covering all the important topics from where the numericals can be asked in the 8th November exam. So be till the end, stay tuned till the end. Whatever doubts you have, keep on posting in the chat section and we will definitely try to address each one of the doubt. Okay, so let's get started with the first question. A commercial bank sanctions term loans to 5 different MSc borrowers under the CGT MSc CGS1 scheme. The bank wants to assess its total expected guarantee coverage from CGT MSc based on each borrower category and sanctioned amount. Okay. So we have various types of credit guarantee funds. From this particular question, which type of fund is asked? Your CGT MSc, and that too under the scheme 1 category. What all is given? So there are various borrowers. Borrower A is from the micro enterprises and the sanctioned loan amount stands at 6 lakh rupees. Borrower B falls under the category SC of entrepreneur in northeastern region with the sanctioned loan amount 15 lakh. Women entrepreneur in the aspirational district, sanctioned loan amount is rupees 55 lakh. When I talk about the journal MSc, the no special category MSc, it is 65 lakh. Lastly, when you talk about the ZED, from there also one micro enterprise is there, and with your ZED certification, the loan amount which is sanctioned is 120 lakh, or for that matter you can say 1.2 crore. Okay, so all these important components are given to you. You have to tell me that what is the total CGTMSC guaranteed amount for all the 5 borrowers. You have to calculate individual amount of CGTMSC cover, and ultimately you have to add them, giving the reply here as A, B, C, or D. What will be the right answer? Take your time, take 1 minute or so, and try to answer as soon as possible. Okay. So when you talk about this particular question, the right answer is option C, that is 205.5 lakh. How we will be calculating it, let's see one by one. But before that, we should know some basics. So there is one important table in the PPP examination, in the PPP exam syllabus, which talks about the maximum guarantee coverage for various categories. And this table, along with many other tables, they are important for our 8th November examination. So when you talk about the loan amount, various loan amounts are there. That is from till up to 5 lakh, then 5 lakh to up to 50 lakh, then above 50 lakh and up to 500 lakh. All these 3 categories are given. When I talk about the category to which the loan has been disbursed, they are micro enterprises MSc located in NER, that is northeastern region, including Sikkim, UT of J&K, UT of Ladakh. Then we have women, SC, ST, PWD, Agniveer, aspirational or ZED certified MSCs. Along with that, all other category of the borrowers. What you have to remember is that for micro enterprises, having loan up to 5 lakh, the guarantee coverage is 85%. For the loan amount 5 lakh to 50 lakh, it is 75%. 50 lakh to 500 lakh, that is 5 crore, will be 75%. When we talk about the MSCs located in northeastern region, it will be 80% for up to 5 lakh, 80% for 5 to 50 lakh, and a bit of lesser amount, that is 75% for the loans amounting between 50 to 500 lakh. Next, we have the women entrepreneurs, or for that matter, SZED certified MSCs. For them, for any kind of loan amount, the guarantee coverage is 85%. And similarly, for all the other type of borrowers, whatever the borrowing amount is, the guarantee coverage is 75%. Now, how you calculate? So based on various parameters, when we talk about the micro enterprises, as in the question it was given as 6 lakh, fine. And for the loans up to 5 lakh, what will be the coverage? 85% of the 5 lakh, which will be 4.25. Now remaining 1 lakh, this 6 lakh is what? 5 plus 1. So up to 5 lakh, the coverage will be 4.25. That is 85% of 5 lakh. Here you can see now in the micro enterprises, this limit. Remaining 1 lakh, what will be the amount? 75%, as the part above your 5 lakh is 6 lakh. So 5 lakh, how you will reach? Plus 1 lakh. And it will be what? 0.75 lakh. Okay, so 75% by, because here you can see that it is 75%. Okay, 75%, as the part above 5 lakh is your 1 lakh, fine. So for that you have the 75%, and when we talk about the total, it will be 5 lakh. That is 4.25 plus 0.75. It will be what? Rupees 5 lakh. Similarly, for your uh, northeast region category, here you will find that the amount is what? It is 15 lakh, which was given. Here you can see it was 15 lakh, the sanctioned loan amount. And up to 5 lakh, it will be 85% of the 5 lakh. Remaining, or you can say the next 10 lakh, that is to reach up to 15 lakh, it is 80%, which will be 8 lakh. Okay, so like that you have to calculate each of the categories, be it for the woman entrepreneur, journal MSc, or micro enterprises. So here you will find 12.25 lakh. Then women entrepreneur, similarly you have to calculate till 55 lakh. After that you have the journal MSc, which was 65 lakh. Here what is the stipulation given under the guarantee cover? So up to 5 lakh, it is 85% of the amount. Then above and beyond this particular limit, next 45 lakh will be 80%, and the balance will be what? 75%. Total will be 51.5 lakh. Lastly, for the ZDD certified enterprises, it was mentioned the loan amount as 120 lakh, and up to 5 lakh, up then next 45 lakh, and lastly you have the balance, that is 70 lakh. You will calculate, and ultimately the answer will be 92.75 lakh. Now all these you have to add: 92.75 plus 51.5, then 44, then 12.25, and 0, and your 5 lakh. Fine. So the right answer for this question will be option C, that is 205.5 lakh. Okay, so such kind of questions you can expect in 2 marker. So 2 marker questions, yes, IIBF asks such questions in 2 marks, for 2 marks. Okay, now this question, try to answer this question, which is based on the working capital requirement, the WCR. Quickly try to reply what is the right answer here. Okay, okay. Yes, yes. You have to calculate, have to calculate. Okay, okay. Fine, fine, fine. So when we talk about the WCR, that is working capital requirement for MSABC, let's just first see that what is the question saying. So MSABC is engaged in a ready-made garments manufacturing activity. Relevant operational data is as follows. So you have the procurement of raw material as 30 days, conversion or the process time is 15 days. Average holding period of finished goods is again 15 days. Average collection period is 30 days. And when I talk about the annual operating expenses, it is 60 lakh. So you have to calculate the working capital requirement, which is a very simple question, right? All of the things are mentioned. Simply, you have to apply the formula. Answer is option B, that is 15 lakh. How you will be calculating it? So the total operating cycle will be what? 30 plus 15 plus 15 plus 30. That will give you the 90 days. Fine. Okay. Here you will see the total operating cycle will be of 90 days. And when we talk about the number of operating cycles, so always remember, for the ease of reference, the number of days in a year, they are taken as 360 while calculating working capital. So 360 divided by the 90 days, you will have how many operating cycles per year? It will be 4. Now, when we talk about the working capital requirement, it is total operating expenses, whatever the operating expenses are, that is 60 lakh, and that you have to divide by the number of operating cycles, which is 4. So total operating expenses, so your 60 lakh divided by 4, correct answer will be 15 lakh. Okay. So although such questions you might find tricky at first, in the first glance, you will feel that it is a tough question, difficult question, but they are the most doable ones. Fine. Whenever there is a question on working capital, do not skip that question. Simple things are asked in the examination. Last time also, in May 2025, many students, they missed the cutoff because they left such questions. You should not do the same mistake. Okay. A company has a net profit of rupees 4 lakh, depreciation of 1 lakh, interest on term loan of 2 lakh, and the annual installment on the term loan is 3 lakh. Okay. Everything is given to you. Net profit is given, depreciation is given, then term loan interest is given, and the annual installment is also given. What is the DSCR, debt service coverage ratio? Simple, very simple question. Just you need to apply the formula. Try to answer this question within 1 minute. Fine, within 1 minute. Although 1 minute is a bit too much, but still, if you are a new student, then definitely you will require such time. So net profit and depreciation, interest amount on the loan, and your annual installment. Correct answer for this question is option B, that is 1.4. 1.4 will be the correct answer. How we have arrived? So net profit plus depreciation plus interest divide by the interest on term loan plus the installment. Okay. So installment along with the interest, it makes you capable that whether you can repay the loan or not, and that will be in the bottom side in the you can say uh, numerator. You will find the net profit, depreciation, interest on term loan. So the net profit of an enterprise plus depreciation plus interest will be added, and we will have 4 plus 1 plus 2, that is 7, and 2 plus 3 as 5. Correct answer is 1.4. Anybody who can tell me that DSCR, what is the value which we admit while giving a loan? We calculate DSCR, and what is the value up to which we provide the loan? We say that yes, if the DSCR is beyond 1.25, then everything is fine. Okay. So although we have some more questions based on the other topics, but some important tables, as I was telling you in the first question, we should revise. So while calculating the various parameters, you have the Tandon method, right? So evaluating the bank finance, you have the Tandon method with you, and there are three methods: Tandon method 1, Tandon method 2, Tandon method 3. What is the basis of calculation? That is where the difference lies between these three methods. One, or the first method, talks about the working capital gap, that is WCG, that is the benchmark. Then we have in the second method TCA, total current asset, as the benchmark. After that, we have the CCA, that is your core current assets, as the benchmark. So when we talk about the benchmarks, what about the margin? In case of margin, simply 25% of the working capital gap will be your margin or the borrower's contribution. 25% of TCA, total current asset, will be the margin. When we talk about the second method, for third method also, it is 25% of the core current assets. Then the question which normally IIBF asks is this, that is bank finance. So the remaining part out of this particular working capital gap will be what? Your bank finance. So 25% margin, 75 will be the bank finance. 25% margin, in the TCA, 75% will be the bank finance. And when we talk about 25% margin in the CCA, then 75% will be your uh, bank finance. Some key pointers are also there. Fine. So minimum 25% margin from the long-term funds should be there in the first method as per the first method. And when we talk about the minimum current ratio from via the second method, it talks about 1.33 is to 1, or simply stated, it is 1.33 only. Lastly, when we talk about the CCA, that is core current assets, 75% of the CCA plus minimum of 25% of the balance current assets will be factored in the third method, that is Tandon's third method. Okay, now let's try to find out the MPBF, maximum permissible bank finance. So given the following data in lakh rupees, you have to calculate using the first method, the MPBF. So total current assets 370 lakh, current liabilities other than the bank borrowings is 150 lakh. 25% of the working capital gap is already given, that is 55 lakh, which will be what? Whether it will be the customer's you can say obligation or the customer's margin, or for that matter the maximum permissible bank finance. This is what? This is just the margin as per the first method. See, always remember this working capital gap, we are talking about first method. So they can ask in the reverse cycle also, they will give you working capital gap and ask that based on which method you can find the bank finance. So Rantan method 1 if the working capital gap is given, if the total current asset is given, second method, core current assets, third method. So what will be the right answer here? Simply stated, the correct answer is 165 lakh. Again, simple question. You just have to first calculate the working capital gap. Okay, because that is the benchmark when we talk about the first method. So step one will be calculating the benchmark. How you will calculate working capital gap? The total current asset minus the current liabilities. So current assets minus current liabilities, you will get as what? 220 lakh. Then now you have to deduct 25% of the working capital gap, that is 25% of 220, 220 lakh, it will be 55 lakh. And when I talk about the maximum permissible bank finance, so whatever the working capital gap is, from there we have to deduct the margin money and we will get the MPBF as 165 lakh, which will be the right answer. Fine. This is the amount the banks may finance as the capital working capital to the firm under the first method. So it is not necessary for the bank to provide for all the amount, the 165 lakh, but that is the maximum amount. Fine, not the other amount, or you can say the minimum amount. This is the maximum one. Bank can finance you only 60 lakh as well. Fine, whatever it feels like. Fine. Next, a firm has following financial data in lakh rupees. Current assets, total current assets is given. Then current liabilities other than the bank borrowings is given as 150 lakh, and bank borrowing including the bills discounted is given as 200 lakh. A very important thing to understand. Using the second method, calculate the maximum permissible bank finance limit, that is MPBF for the firm. So current asset, current liability, you will get the working capital. But here, the second method, what is the benchmark? Step one will be to check what is the benchmark. So when you talk about the second method, what was the benchmark? Again, revisit the table. It is the total current assets. Fine. So total current assets, you have to calculate first. Here it is given already 370 lakh, and MPPF I hope you can find very easily. The right answer is option B, 128 lakh. Fine. So the second method states 75% of the total current asset minus the liabilities will give you the MPBF. So when we talk about the maximum permissible limit, first you have to calculate 75% of the total current assets, which was 370. So 370 multiplied by 75%, approximately 278 lakh will be the answer. Now from this particular amount, you have to subtract the current liabilities other than the bank borrowings, and you will get the answer as 128 for the MPBF, maximum permissible bank finance. Fine. Okay, just give me a moment. Yes. Fine. Now let's move on to the question based on Kisan credit card. See, in your PPB, you will find some chapters from where questions can be asked. Maximum chapters or all of the chapters, if I may say, they are from module B only. In module B, there are three most important chapters from where questions will be asked. One is agri finance. Then you have the priority sector lending, from there questions will be asked. And thirdly, the questions will be asked from the working capital chapter. Fine, that is the fund and non-fund based facilities. So try to answer this question, which is based on the agri credit. A farmer has 2 acre of land, 1.25 cultivated with wheat, 0.75 with cotton. The value per acre for your wheat is 12,000, cotton is 18,000. What is the total KCC limit the farmer is eligible for? So I will be explaining, so I will write. But in your case, what you should do, just give me the right answer by calculating, and always use the calculator with you. Fine, always use the calculator. Otherwise, you won't be able to attempt all the questions. If 15 questions are asked based on such kind of numericals, then it will be an uphill task to read the entire paper. Okay, so do use calculator. That is the message. So the farmer has 2 acres of land is there. 1.25 it is cultivated with wheat, and the remaining 0.75 is with the cotton. Value per acre for wheat is 12,000, and in case of cotton it is 18,000. What will be the Kisan credit card limit? So the right answer, as most of you are saying, it is option B, 28,500. How we will be calculating it, but before that, let us just go with the basics. See, there are short-term limit for the farmers raising single crop in a year, and these limits are provided by the DLTC for uniformity. And the short-term limit is for meeting the financial requirements for your raising the crops and related to the cultivation cost. For uniformity, you will find that DLTC, it will publish the actual amount which you can finance per acre for various crops in your district. It assesses cultivation cost per hectare for different crops raised in district and determines the scale of finance. So in our banks, we say that scale of finance for various crops has been released on the website of your district administration. And who provides that particular information? Provided by the DLTC. So always remember, DLTC is the ultimate authority to provide for the scale of finance. So the short-term limit for first year, what will be the right calculation? Scale of finance for the crop multiply by the extent of area cultivated. So scale of finance will be provided by DLTC, just multiply it with the area. So scale of finance multiplied by the area. That is the first component for the calculation of limit, KCC limit in the first year. Plus you have to add 10% of the limit towards post harvest or the household consumption requirements. So 10% of the limit will go towards the household consumption requirements. Plus, along with that, 20% of the limit towards the repairs and the maintenance expenses of the farm assets, plus the crop insurance. Fine. This is how you calculate the short-term limit for the first year. And maximum time we have seen 10%, and you have to add it with the 20% will give us the first year's requirement for your KCC limit. Subsequently, in the second and subsequent years, you will find how by just doing 10%, by just calculating 10% of the limit towards the cost of escalation, increase of scale of finance, all these things will be added there. So these are worked out as follows. First year limit of for your crop cultivation production arrived at plus the plus above uh, arrived at as above plus your 10% of the limit towards cost escalation, increase in scale of finance for every successive year, second, third, fourth, and fifth, and so on. You will be calculating for each year. For first year, this will be the right answer. For second year onwards, how you will be calculating the value which you have arrived at the first year plus 10%. Then again, for the first year, whatever the second year amount is, for that you will be having the benchmark as second year plus 10% for the third year's limit. For fourth year's limit, the benchmark will be the third year limit plus 10%. So in effect, you will find that there is 10% rise in each subsequent year in your KCC limit. Okay. So when I talk about the KCC limit, how you will be calculating, just simply multiply the scale of finance with the area. This scale of finance multiply by area. Simple. So scale of finance was what? 12,000 for wheat. Area was 1.25. The limit will be 15,000 for wheat. The scale of finance was 18,000 multiplied by 0.75. The answer will be 13,500. Just add these two limits. You will get 28,500 as the KCC limit. Okay, and do not worry that how you will be calculating the scale of the particular KCC limit for year 1, 2, 3, 4, 5. We will be telling you via one question in this session only. Okay, so this was a simple question. We will be increasing the level as well. A company has an average daily raw material consumption of 400 kg, maintains an average stock of 1200 kg, operating stock of raw material is 800 kg, and closing stock is 1600 kg. What is the raw material storage period? So RWSP, what will be the right answer? All of you should remember the formulas. If you do not remember the formulas, if you are confused regarding the formulas, then such easy questions you will have to skip and ultimately lose one or in fact sometimes 2 marks as well. Okay. Try to answer, try to answer. Average daily raw material, the consumption 400, average stock 1200, opening stock raw material 800, closing stock 1600. Raw material storage period will be option B, that is 3 days. But how? See, the formula stands like this. First of all, you have to calculate the average stock of raw material, which will be the opening plus closing stock divided by 2. That will give you the average stock of raw materials. So 800 plus 1600, here you can see 800 plus 1600 divided by 2. You will get 1200 kg as the average stock of raw materials. Now, when we talk about calculating the raw material storage period, it will be what? The average stock of raw material divided by the average daily consumption. Fine. Because the storage period depends upon your consumption also, till when you have to store until the consumption is fully utilized. Okay. So it will be what? Your average stock was 1200, average daily consumption is 400, answer will be 3 days. Okay. Here you can see it is 400 kg, the average daily raw material consumption. Fine. So 3 days will be the right answer. Additionally, in the description, you can see that the raw material storage period measures how long on average the stock will last based on daily usage. The company maintains 1200 kg of stock, consumes 400 per day. So the stock will last for 3 days only. Fine. Simply stated, that is the formula, or also you can calculate on your own as well, that what is the average daily consumption. Everybody knows given as 400 kg. Once you know that what is the actual stock of raw material, the average stock of raw material, you can easily calculate the raw material storage period. Okay, just divide the two values. Okay, now let's see one question on PCR. See, the questions based on PCR or the formulas are very, very easy. Fine, formulas of ratio analysis, because they are primarily tested in AFM. But again, we cannot just ignore them. We have seen in IFS that questions were from the book, but some questions, because of which the candidates were unable to crack the exam also, they were from the uh, particular topics which were not mentioned at all in the books. Okay. So these are mentioned, at least that we should do, right? A bank has gross NPA of 80 crore. Bank has made provisions of 52 crore for these NPAs. What is the PCR, the provision coverage ratio? Simply stated, answer is option B, that is 65%. And how? Simple, 52, that is the provision divided by the gross NPA. So the provisions for NPA divided by the gross NPA, it will give you the actual amount of provision coverage ratio, that is PCR. And why PCR is necessary? So that we can know that whether the provisions applied for NPAs is beyond the particular limit or not, which we will be calculating for strengthening our credit delivery in a bank. This means the bank has set aside provisions covering 65% of its total NPA, indicating its financial preparedness to absorb the potential losses. And that is the ultimate aim, objective of maintaining one PCR. Okay. So I hope that you will remember the formula: provisions divided by the gross NPA. Now let's move on to the another question, and let's see how we will be approaching the question. See, such type of numerical, it was asked in 2023 also, but back then it was not at all uh, considered serious because it was just one question. But in 2025 May, we have seen 5 or 6 questions based on this particular formula itself. And again, you can find these questions on 8th of November. So Ajay Enterprises manufactures the automotive components and expects rapid growth in this year. The firm projects a turnover of 12 crore based on planned supply contracts with major automakers. The company's management intends to apply for working capital finance under the turnover method. Fine. So always remember working capital finance. What is the formula under your turnover method? How it is basically calculated. The bank's policy is to finance 20% of the turnover as working capital, okay, with at least 5% to be contributed by the borrower as margin money. However, Ajay Enterprises also expects to receive a government subsidy of 30 lakh for adopting eco-friendly manufacturing practices, expected to be credited to its account directly and specifically for working capital. So when we talk about the working capital finance, it will be indirectly made via the government subsidy of 30 lakhs as well. This is the point which you must note in your mind. The company also maintains minimum cash balance of 10 lakh for unforeseen expenses, which should not be counted towards available working capital finance. Fine, this is not under the WCF. Based on the information, what will be the effective working capital finance provided by the bank? What total amount will Ajay Enterprises contribute, including the subsidy as per the bank norms? Okay, two things are being asked. First, what is the effective working capital finance provided by the bank? And secondly, the most important one, the more important one is that what will be the ultimate amount which Ajay Enterprise will contribute, which includes the subsidy also. So what will be the correct answer? How you will be approaching it? Try to solve it. Take 1 minute or so. Within 1 minute, try to solve it. And we will be also having a discussion around this particular question. But first of all, try. Okay, so bank finance and borrower contribution will be what? It will be 2.4 crore, the bank finance. Borrower contribution will be the remaining one, that is 60 lakh, which includes the subsidy as well. How? First of all, you have to calculate the total working capital required, which is what? Remember the turnover method, 25% of the turnover. That will give you the working capital which is required. So 25% of the 12 crore, which is what? The 12 crore is your turnover. So 12 crore, 25% will be 3 crore. Then we have bank finance, which will be 20% of the turnover. 20% of 12 crore will give you 2.4 CR. After that, the margin amount will be what? 5% of the turnover, which is 60 lakh. So very simple question, fine. Not just say that it is a very tricky question, very difficult one. But why it becomes difficult to answer? Because of this, because of the statements, right? That's why I told you answer in 1 minute. That is the thing which you should keep in your mind. The bigger the question, the easier it is. Everything is given in the question itself. You need not to calculate anything. Fine. When there are short questions, you will have to calculate certain things and then apply the formula and arrive at the answer. When there are bigger statements, have faith in your practice and try that question. Chances are really high that 80-90% of the time you will solve it within 1 minute. Okay. Fine. So the subsidy, that is 30 lakh, is for the working capital as per the guidelines. This can count towards the borrower contribution. The minimum cash balance of 10 lakh is maintained for contingency only. Fine. So cash balances is for the emergency purpose, not directly considered as the borrower's contribution, nor does it reduce the working capital. So bank finance comes out to be 2.4 crore. Effective contribution from the borrower will be 60 lakh, which can be met through the uh, owned funds and via the government subsidy as well. Okay. So how you should remember, 25% is the working capital requirement. Fine. Out of that, 20% will be the bank finance and 5% is the margin. Simple. Next question. MS Alpha Tech is an IT solutions firm. Projected annual turnover for the next year is 200 lakhs. Turnover, again, turnover. The available net working capital NWC is 8 lakh. Under the turnover method, working capital requirement is calculated as 25% of the turnover. The bank finances maximum 80% of the working capital requirement. Borrower must contribute the remainder. That is the 20%, right? But whether 20% will be there or not, that is also you have to apply in your mind and then answer. What are the working capital requirement, money margin money, and your bank finance for Alpha Tech? So all the three things you have to answer. And this question was there in May 2025. Fine. This year only this question has been asked. So try to answer. Again, as I was telling you, the maximum time you will feel troubled in the numericals for PPP, it will be in the agri finance, not in these questions where working capital is given, where the turnover is given. You only have to, tweak certain things like 20%, whether it will go towards the bank finance, 5% it should be in the margin money, total is what, 25%, like that. Everything is fixed. But in agri finance, you have to first apply your mind that whether we can include a particular scale of finance, what is the area involved, what is the land there, what kind of land is there. Some case studies are there where the barren land is also given in the question. Then the question will say that tractor loan is also there. Then you have the dairy unit also. And finally, you have to calculate the overall exposure of a particular borrower. But we will look into that. Right now, the right answer for this question will be option A, that is working capital requirements 40 lakh, margin money 8 lakh, bank finances 32 lakh. Fine. So the remaining amount will be your margin money provided by the customer. So 25% of 200 lakh will be your what? Here you can see that the annual turnover is 200 lakh. So the 25% of your annual turnover will give you the working capital requirement as per the turnover method. Again, out of 25%, your 80% of WCR will give the maximum bank finance. So 80% of this, that is 20 lakh, will be your 40 lakh, which is given here also. Fine. 20, maximum 80% of WCR. Now remaining, you have to calculate the borrower's margin or the margin money. Working capital required minus bank finance. Directly you can answer 50 minus 40 is 10 lakh. Or for that matter, if you want to go by the formula, go by the Tandon method, then 20% of this working capital requirement you can answer like that also. 20% of the working capital requirement will be the margin. Fine. So the right answer for this question will be 50 minus 40, that is 10 lakh will be the borrower's margin. 40 lakh will be the uh, maximum finance. 50 lakh will be the working capital required. And here also the net working capital is 8 lakh. Fine. The net working capital is 8 lakh, which was given in the question itself. Net working capital is what? 8 lakh. So Alpha Tech must bring additional 2 lakh as the margin to meet the required contribution. Fine. So the net working capital already they have is 8 lakh, but additionally 2 lakh they must bring from the market. Okay. So the margin money will be 8 lakh here, and the bank finance is 32 lakh. Here 32 lakh and 8 lakh. Fine. 80%, and then we have the remaining 20%. Fine. A bank reports the following data. There is a set of data provided to you. You have to calculate net NPA percentage of the net advances. So net NPA percentage of net advances. How you will be calculating that? So net NPA percentage is what? The formula? Anybody? Do let me know in the comment section. First, you have to calculate the net advances. So from the gross, you have to calculate the net. How you will be calculating? So gross advances 2000 crore, gross NPA 180 crore. Provisions, we have seen one question, PCR. Provisions held in NPA 35 crore. Then we have the claims ECGC and the DICGC claims received and held pending adjustment. It is 15 crore. Part payment received and kept in suspense account, it is 10 crore, and floating provision is given as 5 crore. What will be the right answer here? See, it's a very direct question. If you know the formula, the answer will be option A, that is 5.95%. How? Simply stated, you will be requiring these steps. First of all, the provisions for the given question is 35 crore, claims are 15 crore, suspense account 10 crore, floating provisions 5 crore. So the total deduction will be what? Provisions plus claims plus suspense account amount plus the floating provisions, which will give you 65 crore. Now, in order to calculate the net NPA from gross, you have to subtract this total deduction. So 180 minus 65, you will get 115 crore as the net NPA. Now, in order to calculate the net advances from the gross advances, you have to subtract the deduction. So the gross advances were how many? How much? It was 2000 crore. From that, you have to subtract 65 crore, and net advances will be 1935 crore. Net advances will be 1935 crore. Now, what you have to calculate? The ratio of your net NPA and net advances. Fine. So net NPA percentage will be what? Net NPA divided by net advances. So 115 divided by 1935. Here you can see net NPA divided by your net advances. Right? And net NPA is what? It is 115 divided by your net advances, which is 1935. Use the calculator to arrive at the answer. And when we talk about what is this ratio, multiply by 100%, it will be your net NPA. Right? So always remember the formula for net NPA is what? A net NPA percentage change is what? Net NPA divided by the net advances, right? Multiply by 100. One piece of information for all of you when we talk about how you will be calculating the deductions, or how you will know that it is a part of deduction or not. Whatever the components are present here, what constitutes the deduction part. So here you can see for yourself, deductions are the provisions held in the case of NPA, and all the provisions, then DICGC, ECGC claims received and held pending adjustment, then part payment received and kept in the suspense account, balance in the sundries account, interest capitalization minus the restructured account in respect of NPA accounts, and minus your floating provisions as well. Fine. All the five you must remember as deduction. Gross advances, everybody knows the standard asset plus the gross NPA gives you the gross advances. Gross NPA has a percentage of gross advances, just have a ratio between the two terms. Net advances, gross minus the deduction. Net NPA, gross NPA minus the deduction. So that is why it is very, very important to understand, to learn, to cram, to mug up what all are the deductions. Fine, these five you must remember. Net NPAs as percentage of net advances, it is net NPAs divided by net advances in percentage. Fine. Next question. This question Everybody should tell me, because this is same, exactly the same concept is applied, fine, as the previous question which we have discussed. Quickly tell me the right answer. All of you should give me the right answer as soon as possible. We won't be discussing this because this is your task. Right? All of you who are watching this after the live event is over, then do let me know in the comment section the answer for this question. Right? You have to comment net NPA. Right? Just type and net NPA is equal to the actual option, whether it is 5%, 6%, 5.8 or 7%. The right answer is 5%. Fine. Okay. Fine. Again, the same explanation holds true here also. You have to just calculate the total deductions first, add all the deductions, then net NPA, gross minus deduction, net advances, gross minus deductions, and the ratio between the two will give you the net NPA in percentage form, which will be what? 5.15%. But when we talk about the state options in this particular question, the most appropriate answer is 5% only. Fine. So from here, you can remember one more thing, that whenever the question is not having the exactly the same option, you can choose the nearest option as well. That is a piece of information for all of you. Fine. Now let's see a question based on PSL. The priority sector lending targets, very, very important, and whether a particular bank needs to calculate everything to calculate ANBC or not, that also will be learning in the next question. So to further the targeted flow of priority sector lending PSL, Bank Z distributes its total PSL advances across districts as follows. So the category of districts is given and the PSL advances is given in crores. We have different categories: lower flow of credit, normal flow of credit, higher flow of credit. And the PSL advances are subsequently 300, 1300 and 500. The total being 2100 crore as the PSL advances. The regulatory weights for achievement adjustment are, for the lower flow, it is 125%, because you are achieving a higher target. Always remember, when the flow of credit is low, but you are providing more advances, then you will be compensated with more amount of achievement. So you have achieved more, you will be provided more. So lower floor, you will be having 125. And as we move towards higher flow, you will find a lower weight. Normal flow 100%, higher flow 90%. So for PSL target purpose, the achievement will be reckoned as what? What will be the PSL target, overall target for the bank Z? And when we talk about the entire districts means this total value 2100. Right answer will be option B only, 2120 crore. How? See, for lower floor, you will be having 125% of 300, 125%. Fine. Then for the normal flow, 1300 multiply by 100%. And then 90% of what? Of your higher flow, just add them, and you will be getting 2125 as the right answer. And when we talk about the correct answer for this question, again, we have rounded off the options. The correct answer is 2120 crore. Okay. Now let's see a question based on the ANBC. This question was also asked in the last examination. Given the following financial details of ABC Bank as of March 31, 2025 in crores rupees, you have to calculate the ANBC of this particular bank. What all is given? Bank credit is given. Bill rediscounted with RBI is given, which are subtracted, right? So that we should not have the duplication. Outstanding deposit under RIDF, the Rural Infrastructure Development Fund, NHB, SIDB, Mudra, that is also given. Eligible exemptions for infrastructure bonds is provided. Advances against incremental FCNR, NRE deposits. Then investments in recapitalization bonds. Then priority sector investment eligible for classification. Right? So the PSL investments, whichever are eligible for the classification, it is 1500 crore. Non-SLR bonds, no stipulation of maintaining the SLR under the HTM, high yield maturity. Fine. The category, it is 1200 crore. So what will be the ANBC? Simply stated, you have to add something, you have to subtract something. If you know that table which we have discussed in the classes, this is fairly an easy question, and this question was considered as the tough. The right answer will be here. You can see the correct answer for this question comes out to be 166700, right? This will be the right answer. That is option A. We will be looking into the formula also. You have to just calculate it using the calculator. The right answer is option A. A will be the right answer here. How? So in the ANBC, there are various components. So bank credit, you subtract it with the bills rediscounted with RBI, you get the NBC, that is net bank credit. Then you will be having the outstanding deposit under RIDF. Then for the exemptions in case of infrastructure, housing bonds, then FCNR, investment in the recapitalization bonds, other investments as priority sector, for example, the securitization notes are there. Then we have the HTM category, non-SLR, and for UCBs also, urban cooperatives also, investments in permitted non-SLR bonds is given. So these are the two formulas which you have to remember. Other than UCBs, the third, that is your net bank credit plus outstanding deposit under the RIDF minus will be what? You will subtract this particular amount, that is your eligible amount for exemption on infrastructure or housing bonds. Plus you have to add the remaining amounts, that is 6, 7, 8 and 9. Right? 6, 7, 8 and 9. You have to add all these till here. Okay, so always remember the eligible amount for exemptions on infrastructure housing bonds will be subtracted. Remaining all are just added whenever we talk about the ANBC, or how you can simplify this thing, that you have to add all these. Fine, add all these third, fourth, and then you have to add your eighth and ninth also. Fine, simply stated, eighth and ninth also you have to add, but you have to subtract 5, 6 and 7, like that you can say. Okay, so third plus fourth, okay, then minus these three, 5, minus the addition of these three, 5 plus 6 plus 7, yes, and then plus the eighth, and lastly the ninth as well. That will give you the ANBC amount. For UCBs, what you have to do, simply stated, you need not to have the FCNR advance. Fine, this is not included in UCBs. And when we talk about the other parameters, that is your seventh, investment in recapitalization bond is also not included, and your non-SLR category is also not included. So what will be done? 3 plus 4 plus 3 plus 4 minus 5 plus 8 plus 10. Okay. So these two formulas, if you remember, then you can easily answer the question. So first of all, you have to calculate the NBC, then add the RIDF, then minus your deductions. Deductions being what? The 5, 6 and 7th category. The addition of this you will be subtracting. Then lastly, you will have to add the seventh, yes, after that eighth and ninth category you have to simply add, and the right answer for this question will be option A, that is 166,700 crores. Okay, so formulas, if you remember, for ANBC calculation, it is very easy question. What you need to remember is this, that this component is subtracted, and in UCB again you will find that there is no reference whatsoever of sixth and seventh. Along with that, ninth is also excluded. Now let's see the important question, very important question. One question of such kind is expected in the examination. A farmer has land holding of 8 acres and cultivates paddy 12,000 per acre, maize 8,000 per acre, cotton 20,000 per acre. 4 acres each is there of all these. For the first year, the total cost of cultivation is calculated by adding the scale of finance for each crop. Each crop you are just adding. the bank adds 10% of the post harvest or household expenses and 20% for farm maintenance on the total crop cost. So the bank also adds 10% post harvest household expenses, the consumption one which we were looking into when we talked about the KCC limit question previously also, and 20% for farm maintenance on the total crop cost. So that is the first year, right? For subsequent years, second to fifth, 10% escalation in limit is applied annually. So whatever the limit is for third year, second plus 10%, for fourth year, third plus 10%, and for fourth, third plus 10%, for fifth, it will be fourth plus 10%. What will be the crop loan limits for each year? For all the years, you have to calculate what will be the right answer. Correct answer is option B. Right? First, second, third, fourth, as well as fifth. Yes. Okay. Try to answer. Try to answer. Try to calculate. Okay. Try to calculate this particular question, because when we talk about the issue which you will face is determining the scale of finance. If you know the scale of finance, just multiply it by the area which is there, and you will get the first year's KCC limit. Very easy, very easy. After that, just add the 10% amount. Okay, it will be the right answer. All these things, if you calculate initially only, then it will be very beneficial to you. So for paddy, maize, and cotton, how you will be calculating? The acres multiply by the scale of finance. So for paddy, it will come out to be 48,000, maize 32,000, and cotton 80,000. So when we talk about the step, so step one for such questions where you are asked all the limits of KCC account, you should calculate the scale of finance multiply by the area, whatever the crops are there. Here, three crops were mentioned. So all the three we have calculated in the first step. So what will be the total crop cost? It will come out to be 1,60,000. So should we say that 1,60,000 will be the KCC limit? Answer is no. We have to calculate. So here you have to add what? 10% of the post harvest household, which comes out to be 16,000. Fine. 10% of the post harvest. Fine. It will come out to be what? Your 16,000 here. 20% of your 1.6 will be 32,000. Fine. That will go to the farm maintenance. So you have to add these also. So the total crop loan limit for the first year will come out to be total crop cost, that was 1.6 lakh. 10% of this cost will be 16,000, which will go towards post harvest or the household consumptions. Lastly, we will be adding 20% for the farm maintenance, and the answer for the first limit will be 2.08 lakh. Now what? Now for second year, just add 10% escalation and you will get the answer as 2.28 lakh. Fine. 2,28,800 as the second year's KCC limit. Okay. So in the first year, you have to add the 10% of the first year. You will arrive at this particular answer. For the third year, you have to do what? Just add the second year with the 10% of the second year. You will get this as the right answer. For fourth year again, this amount will be added to the 10% of this amount. You will get the fourth year. Fifth year again, same pattern. This amount, the amount which we get in the fourth year finally, plus 10% of that amount will be the fifth year's amount, the limit. Okay. Simple question. I hope that everybody would be able to answer such kind of questions. Only the formulas, if you remember, then they become very, very easy. Fine. So yes, this particular question you should answer on your own, because again, I'm telling you that we have discussed this question earlier as well. I have given you a hint in the KCC limit based question, which was the first one for the agri finance. Take it as your homework and give me the right answer in the comment section. Okay, so I hope that most of you were able to answer all the questions. Some of you would be able to answer 80% of the questions. Even if you were unable to answer any question, just note down the important formulas, how we should approach, what all steps are involved, and ultimately you will sail through this particular numerical questions, whatever the questions are asked in the actual examination. Okay, so this was it for your numerical class. And when we talk about the important thing, as I was telling you earlier also, that practice is the only thing which you should do right now. So we have the free mock tests now for PPB as well, like in IFS, which we have done. When we talk about the exam date, it is on 8th of November, but you can access these full length mock tests on our website as well as app. For more information, directly you can contact us on 0981 981 9247. In case of any doubt regarding these questions, which whatever we have discussed, do let me know in the comment section, and we will reply as soon as possible. Okay, with that, let's conclude the class. All the best, everybody.